The year 2021 has been a lot calmer than its chaotic predecessor. Still, a slow rotation of value looks to be in action, with growth stocks now significantly more abundant as the economic recovery gets begun in earnest. This means that it is indeed the perfect time to find the best dividend stocks to invest in. If you haven't found your desired companies yet, don't worry because we're here to help you. As in this video, we will list down the top 10 high-paying dividend stocks that everyone should invest in 2021. Before that, let us first know what dividend stocks are. A dividend stock is a dividend paid to shareholders in the form of stock rather than cash. Although it might reduce earnings per share, the stock dividend has the advantage of rewarding shareholders without lowering its cash balance. These stock dividends are usually paid out in fractions of existing shares. For example, if a firm declares a 5% stock dividend, it must issue 0.05 shares for every 100 shares held by existing shareholders, resulting in the owner of 100 shares receiving 5 more shares. Also, be sure to smash the like button and subscribe to the Stock Monster channel to stay updated with the latest trends in the business world. Without further ado, let's get started. First on the list is Target Corporation, TGT. Although its 1.3% dividend yield may leave more to be desired for most income investors, be assured that it is one of just 2 of 15 options yielding less than 2%. Target is coming off a strong year in 2020 when its stock benefits from its expanded focus on digital sales. Target unveiled a $7 billion multi-year investment plan in 2017 to become more digitally savvy, and those efforts are already paying off handsomely. Digital comparable sales increased by 118% last quarter, following a 155% increase the previous quarter. Second, Onemain Holdings Incorporated, OMF. Onemain Holdings is a consumer finance-focused financial services holding company. Onemain generates and handles secured and unsecured personal loans through its subsidiaries and provides a variety of credit insurance products. The firm has 1,500 locations across the United States and offers a digital platform that allows clients to apply for items online. Onemain increased its minimum quarterly dividend by 56% to 70 cents per share on April 26, 2021. Investors who own qualifying shares in the firm at the end of May 6, 2021 will receive the dividend on May 13, 2021. Third, JP Morgan Chase & Co., JPM. The year 2020 was a negative year for banks. Interest rates fell, reducing the crucial difference between what a bank spends to borrow money and its charges for loans. Even the most valued bank in the United States, JP Morgan Chase & Co., was hit by such headwinds, sliding nearly 6% in 2020. For patient investors looking for a safer asset with a respectable return, this was an excellent purchasing opportunity. JP Morgan and other banking equities have profited from rising interest rates in early 2021. JP Morgan shares have outperformed the market this year, and the business continues to pay a 2.2% dividend. Last quarter, JP Morgan reported a 25% growth in trading income, deposits grew 32%, and assets under management grew 28%. As the company topped both revenue and profit projections. With a payout ratio of 29%, the dividend has lots of space to expand. Fourth, Pepsico, PEP. Pepsico, the beverage and snack behemoth, is another top dividend company to buy in 2021, with great diversity across regions and business categories. PEP's Frito-Lay North American business accounted for 28.6% of total sales in the 12 weeks ending March 10th. Trailing behind its PepsiCo Beverage North America section, which accounted for 34.3%. Its main competitor, the Coca-Cola Company, KO, lacks a strong food and snacks segment. And whereas Coca EPS Colas dropped 19% last quarter, PepsiCo's grew by 29%. PEP pays a dividend of 2.9%. Despite a disappointing performance this year, Pepsi is a best-in-class stock when compared to the bigger Coca-Cola. To finish up the first half of our list, we have Cisco Systems, CSCO. Cisco, a $223 billion blue-chip company and Dow Jones Industrial Average component, pays a 2.8% dividend with a payout ratio of 60%. The firm hiked its dividend for 9 years in a row throughout the pandemic and has remained a cash cow. Non-GAAP operational cash flow increased 2% year over year to $4.1 billion in the fourth quarter. Cisco also returned $2.3 billion to stockholders last quarter through stock buybacks and dividends. The communication equipment firm, which essentially produces most of the infrastructure that allows the internet to function, should be a long-term dividend investment. We're now done with the first 5 high-paying dividend stocks on our list. You can take this time to take a sip of your favorite drink or bite on your favorite snack. as we approach the second half of our list. Before we do that, be sure to like this video and support the Stock Monster channel by smashing the subscribe and notification bell buttons. For the 6th high-paying stock on our list, we have Onemain Corporation, NEM. Onemain Corp won a position on our list after being named one of US News' 10 best stocks to buy for 2021. The gold, silver, and copper miner pays a low 3.1% dividend, but it has promised to pay special dividends to shareholders if its mining activities produce unexpected windfall profits. Because of its low connection to the broader market, Onemain's usefulness as a hedge in recessionary circumstances makes it an appealing member of a more comprehensive portfolio. NEM's beta is incredibly low at 0.29, indicating a perfect correlation to the market at 1 and no connection to the market at 0. By 2025, Onemain expects the all-in cost of mining an ounce of gold to be between $800 and $900. At the moment, 1 ounce of gold is worth more than $1,800. 7th, Mondelez International, MDLZ. For various reasons, this $87 billion snack food behemoth is one of the finest dividend stocks to purchase for 2021. First and foremost, the firm is exceptionally steady, precisely what most income investors look for in dividend stocks. Mondelez boasts widespread brand awareness and devotion because of its portfolio of brands, including Oreo, Cadbury, Toblerone, Hale Sweets, Trident Gum, and Tang-powered drinks. Second, with 73% of its revenue coming from outside North America last quarter, Mondelez is an excellent opportunity to add some overseas exposure to your portfolio. MDLZ pays a 2% dividend and has a payout ratio of 46%. 8. Johnson & Johnson, J&J. Johnson & Johnson is another of the few recommendations from 2020 repeated on the list of top dividend stocks to purchase for 2021. J&J's stock did not perform as well as AbbVie's in 2020, rising around 11%. Johnson & Johnson, a blue-chip firm that has been a poster child for decades, is divided into medical equipment, consumer goods, and pharmaceuticals. The consumer side of the business, which sells everything from Listerine and Tylenol to Pepsid and Band-Aids, is virtually indestructible and running well. In 2020, the company's medical equipment section suffered the worst setbacks, with sector sales falling 10.5% as hospitals cut back on procedures due to the pandemic. In the first quarter, this began to improve, and J&J's main segment, pharmaceuticals, had a 7.4% increase in revenue. 9. Discover Financial Services, DFS. Discover Financial Services, a credit card firm, for the second year in a row makes the top 15 dividend stocks to buy list. DFS is the smallest of the major 4 credit card firms, which include Visa, V, $497 billion, MasterCard, MA, $357 billion, and American Express, AXP, $125 billion, with a market capitalization of $35 billion. In some ways, this puts DFS in a better position than the other competitors, since more market share is grabbed. DFS also offers the most prominent dividend of these 4 businesses at 1.5%. With more commerce moving online and away from cash, credit cards should increase market share in 2021. The last dividend stock on our list that you should never miss out on is Crown Castle International Corporation, CCI. Crown Castle International Corp., the second REIT among the top dividend stocks to buy for 2021, works in an increasingly crucial area of the market, owning, operating, or leasing more than 40,000 cell towers in the United States. CCI is an investment in essential telecommunications infrastructure that keeps Americans linked to data, information, and each other. Its properties cover every major US market. As attempts to put out 5G or 5th-generation technology ramp up in the coming years, CCI's towers will play a significant role. CCI provides a dividend of about 3%. With the list of companies with high-paying dividend stocks, we hope that we helped you fill your investment plan for 2021. If we did, kindly leave us a thumbs up and support our channel by sharing this video with your family and colleagues. Also, don't forget to ring the notification bell button to stay updated with the latest uploads of the Stock Monster channel, the only YouTube channel you need to level up your investment and trading game. Thank you for watching and see you in the next Stock Monster videos.